All right, welcome back. We're going to do another trade plan, this time in ASO. And just a reminder, this is part of an exercise we're doing. We're going to do 30 trades where we plan every aspect of the trade ahead of time and then execute according to plan. And so today, I'm going to talk about one of the aspects of a trading plan. I'm going to talk about position sizing and how you can come up with a number. And position sizing is defining how much you're going to risk per trade. Here's what we're after in the end. We want to consistently get the most profit with the least amount of risk. All right? Anybody can luck into a few big winners, but then what? Right? You can have a good month, a good year, good week, but then what? And we're not after luck here, we're after skill. So this is what we're trying to do, get the most out of it with the least amount of risk and do this consistently. Trading is very difficult. Small percentage are able to make profits consistently here, and that's this is what we're after, right? This is our objective. We don't have control over much when it comes to trading, but this is one of the areas we have some control. We can define our risk. So let's talk about how we're going to do that. Before I start even, let me just say if you're relatively new, or you're just trying to work things out still and get going the right way in the market, it's perfectly okay. Right? Like I said, trading is really, this is a difficult thing to do. It's it toys with our every emotion, shows a mirror up to us. But if you're in this position, your position sizing is really simple. You keep it small, really small. And I'll give you a bit of a plan. You know, risk no more than 1/4% of your account or less. You come up with whatever feels comfortable to you, you know, really small. And then what you can do is after 2 months, if you feel comfortable with the method you're using and learning or whatever you use, if you like, you're not guessing and getting lucky, if you feel comfortable with it and you're showing a small profit, then you up your size. And what you can do is incrementally up your size like this. Another 2 months, getting comfortable and showing a small profit, just anything. Believe me, if you're showing a small profit, you're doing better than most people. Don't believe all the videos. And then you incrementally up your size again. And this way you earn your right to size, and it's building a solid foundation. So, and I can tell you this is the faster way to do it than just try to make your millions or try to make it right now. But that might be your path too. It's part of my path. Whatever works, you stay persistent. The market's a patient teacher. All right, so that being said, let's talk about how to position size. My position sizing, there's entire books written about this, but we're going to do it simply, is based on, all you need is two things. You need your risk tolerance, how much you're willing to risk over a series of trades, not per trade. How much you're willing to risk of your account over a series of trades. So you need your risk tolerance. And then drawdown. These two things, and we can calculate it. So when I'm talking drawdown, I'm going to talk drawdown in the sense of how many stops, consecutive stops in a row that you take. So for instance, if this is 1R, right? One risk unit, one stop. So X amount of stops in a row, that's going to be my drawdown. Now, not a lot of people are going to have a consistent, reliable drawdown as part of their trading. It's a bit random, unless you tested over thousands of trades or you've taken thousands of trades, you're liable not to have a good, reliable drawdown of doing something consistently. So what I'm going to do is I'm going to give you a default drawdown so you don't have to think about it. I'm going to give you a default drawdown of 30 consecutive stops in a row. I know that seems a lot, but we're going to do this conservative here. And you can make small adjustments to this as you go. Um, my basic calculation is based on taking your actual drawdown and then doubling it. You know, last year I had a drawdown of 15 stops in a row. I came out the year pretty good, but this helps me to position size. So here's what we do. It's pretty simple. All right, you simply divide the amount you're willing to risk by 30. That's going to give you risk per trade. Now let's break it down. If you're like me, numbers make you sort of just go fuzzy and blank out. But we're going to make this pretty simple, right? Simple as possible. You know, we're going to have to learn some of this. So we're going to be using an account size, right? That's going to be something fixed. You know, what we're looking for is fixed things in this environment of trading. That's going to be fixed. Next, I'm going to enter what is my maximum risk tolerance over a series of trades, not one trade, a series over the year, right? How much drawdown I'm willing to risk. And, you know, industry standards can be anywhere 10, 20% for the year. You know, if you bought and hold the S&P, for instance, in the last 20 years had a drawdown of over 50% several times. So we're going to stick, you know, my comfortable number is somewhere around 10 or 15. Yours can be 7. You choose this. It's basically, right, once you come up with the number, it's basically, you know, what can I afford to lose and still sleep at night and not stress over the trade. If you stress over each and every trade, we as traders, we tend to think in terms of only this trade rather than a series of trades. If you stress over each one, you're not even going to see the setup you spent so much time learning in the first place. You're not going to see it clearly. You're going to distort it because you're stressed. So basically, I'm going to put 15% here. And we'll just do it step by step. Know your account size. Boom, this could be 10,000, this can be 5,000, this can be 2,000, doesn't matter. Here we're using 100,000. Know the maximum percentage you're willing to risk over a series of trades. Here I'm using 15%. So that's total drawdown of account, say for this exercise. So the total dollar amount, that's just going to give us the total dollar amount, 15 grand, right? This times this is going to give us 15. I'm willing to lose 15 grand, 15%. Next, if you don't know your drawdown number, consecutive stops, use a default of 15. So here, to be conservative, I'm going to multiply your default, all right, by 2, giving you 30. So basically, you're going to use 30. And it's that simple. So we take 15,000, which is, you know, what I'm willing to risk, say, for this exercise of 30 trades, 15%, and divide it by 30. So that tells me I can do 30 trades in a row and 500 bucks is my risk per trade. I can do 30 of these, right? 30 times this is going to equal 15,000. And I'm not risking different amounts every single time. It's going to be equivalent risk across the board, everything nice and consistent. Now I'm trying to make this as clear and simple as possible, and that's always a challenge and one of the things that helps me learn. So for instance, if I put this into a spreadsheet, right, you can play with these numbers a little bit. So let's say you had a $10,000 account and 15 was your risk tolerance. That's going to be, hey, over a series of trades, I'm willing to give up $1,500 of my $10,000. Or if that's a bit much for you, you might want to drop this down. I generally live at 10 most of the time. I've upped it this year. So if you enter your risk tolerance at 10%, which is pretty conservative, that will give me $1,000. That's it, right? So imagine I can go over 30 trades, trade for however long, and only lose this much of my account. That gives me plenty of money to keep going and learning. And so my default drawdown is going to be 15 consecutive losses in a row. And then I'm just going to double it to 30. So that's going to tell me, okay, I need to risk $33 per trade, which happens to be, 0.33% of my account. Now, you might not think you can make a lot at 0.33. Um, maybe we'll do another lesson. I'll show you how, I did just fine with a little bit more than that, more than most. The whole idea is you don't think you're going to get 30 in a row? I don't think I'm going to get 50. I got 15 in a row last year. Didn't feel like it was ever going to end. I didn't think that was going to happen. Now, what if I was sized to say 2 or 3% the whole time? That 15 in a row would have killed me. So you don't know. So if we put this back to 100, right, just calculates the numbers a little differently. Let's add another 0. And so that's not much percentage-wise, so we'll put this back to 15. All right. All right, so I can quickly show you like what the drawdown might look like. Okay, so here are my drawdown numbers. So for instance, this is my, e-mini trading, and it's wins and losses, and this is consecutive losses in a row. So you'll be able to see here, you open this up a little bit. So this will give me a max of 15. So this is wins, losses, wins, losses, wins, series of trades. So the first few months were easy. And then I get 6 in a row loss, 6 in a row loss, 7 in a row loss, 9 in a row, a few wins, 6 in a row loss, and then an 11, an 8, and then it went back down again. And so this is just keeping track of numbers over a series of trades. So you can see how many losses and how many wins for that. All right, so that's it. That's basically how to calculate that out. I'm going to give you a default drawdown of 30, and you divide that into your amount you're willing to risk, and that will give you your risk per trade. And then you can do further math to come up with, in our case, it's going to be a 0.5% per trade. And that's what I'm comfortable with. All right, so that's the basics. Let's go ahead and plan the trade, and I could do some more on this. And, there's a few other considerations. I like to, every 5% my account moves, and I add it to the total or subtract it from the total and adjust my size. But that's the basics. You want to know how much per trade, and then you do that every time. Factor in 30 consecutive losses in a row. That's your draw. Now you can play with these numbers a little bit and come up with yours. So now let's do the plan. The analysis, I don't have to spend much time on. It's going up, I'm going up. I'm a swing trader. I'm trading for this swing. That's simple. My trade plan, I already have set up. It's going to look like so. Changing colors while I'm here. All right, so it's good if you set up a template. That way we know exactly where we enter, exactly where we're going to put a stop. This is going to give us our amount of shares. We know exactly how much we're going to risk per trade, right? You see, I've come up with a 0.5%, which is going to be $500 per trade. And I know exactly how I'm going to manage. And the rest of it is just filling this out. So come over here. This is going to be a buy stop. So I have two types of entries. One was just a limit waiting to get hit, and one is to let the market take me in. This is going to be a buy stop limit order, meaning if it gaps above, I don't get filled, but I keep my limit order there waiting. If it hits the low before it triggers me in, the trade is canceled. So I'm going to just fix it at the 50% of this reaction leg. Nothing special about that number. I just want something objective. You got to put your foot down and say, all right, there's nothing perfect. We have to come up with something so we don't have to worry about it every time. This tells me 64.94. And then you get used to this routine. You don't even have to think about it. And you're setting really good foundations for yourself. My stop is going to be 63.16. Now, if I do this consistently over time, and let's say I keep getting barely ticked out, then I'll learn, all right, maybe I need to make a plan where my stop's a little bit bigger. But if I don't do consistently, I'm going to have a hard time learning. All right, so let's enter this in. We have our pending here, and today is the 2nd, 2/2. These are orders we still have waiting. Actually, Adobe hit the high, so that one cancels, and I updated it on the post. So this is going to be ASO. We're going long, and this is just part of my routine, right? I'm going to enter it into a spreadsheet, or you can use a free journal software, that anything. Just make it part of your routine here. So you see everything's already set here. I know my entry. It's going to be, I'll double check things, 64.94. I know my stop, 63.16. Could there be better entries and better stops? I'm sure there are. But simple and consistent is superior or more effective to something technically superior. So that tells me 281 shares. I'm risking 1.78 points divided into my 500 per trade will give me my share amount. And going for 6-1. Then I just finished filling out the share part here. It's going to be 281. And I'll put my actual target, since that's calculated as 6-1 for me. It's going to be 75.62. And then you can put any other notes you want, about the trade, about your analysis or whatever, when the earnings are. All right, let's get this order in. And we're going to do a buy stop limit order at, tighten this up, 64.94. And we're going to do a stop at 63.16. And we're going to do a target. No, I didn't get that one all the way up there. We're going to do a target where 75.62, and then double check everything. We need to set this guy as our risk at $500. Right, that's going to give us 280 shares rounded. So that looks good. This guy's liable to be filled on Monday, so close. But we're going to do an order to take us into the market. So we just check everything. Everything's looking good. 63, and I'll double check this after the recording. Send the order, and now there's nothing to do except follow the plan. That's it. All right, so I hope you learned a little bit about how you can size your trades per trade, and then we'll just see what happens with this guy and do it according to plan. Thanks for watching.